Boys, Oscar Health is up over 10% today, and this is the rally that we have needed. Now, I find it quite hilarious that this rally has started, especially just days after analysts downgraded this stock to around $8. Now, the two analysts that did downgrade this stock and invoke a 30% loss within Oscar's share price, these two analysts had a combined negative 5% return over the market's last 20 years. Now, of course, that is horrendously bad, and in my personal opinion, and what I have told my Discord members, is much like Hims and Palantir when they were in the mid 20s. A lot of analysts will try and downgrade this stock so hedge funds can get their big money in. And of course, once big money's in, retail will follow, and in return, the stock price will shoot up. Now, I do believe that we are starting to see this, especially coming off of these analyst downgrades. Now, these analysts did have a negative 5% return over the past 20 years, so take that with a grain of salt, and that is my thesis, of course. But let's go ahead and take a look a little bit closer into Oscar. Now, I do want to go ahead and take a look briefly at their share price, take a look at their technical analysis and what they are doing on the charts. Now, I am also going to take a look at their financials and the guidance that they posted today, and what we are expected to see over the next 12 to 15 months. Now, I am also going to give you guys a 3-year price projection for Oscar Health and what I expect to be by 2028. And I do highly believe that this stock will see over a 300% return between now and then. And of course, that is going to be severely outpacing the market between that time. Now, let's go ahead and jump right into this video and check out Oscar Health. Now, before we jump onto the chart and check out Oscar's 10% intraday gain, it is important to see what led to that gain. And here I have their quarter two results and guidance moving forward. And we are also expecting their earnings call to come out on August 6th. Now, the key metrics that were released today was a quarter two operational loss of around $230 million. Now, while this loss is quite large, it has actually gotten quite smaller, and these losses continue to get smaller quarter over quarter by about 22%. Now, once they can flip profitable, a 22% gain quarter over quarter in profits will be much more impressive. But for now, it is very important to focus on the way that this company is looking to turn profitable. And I believe right now they are doing just that. Now, their full year 2025 guidance came in at around $12 to $12.2 billion. Like I said, beating estimates by about $1 billion. Now, this was also coming in with their risk added on with ACA subsidizing, which actually shaved off about $1.5 billion of this revenue. Now, if they are able to add that back on, say the big beautiful bill doesn't get enacted and ACA subsidizing is totally fine, we will see their revenue come in this year of around $14 billion, which was their guidance for 2026. If we can see something like that and this company begin to grow even faster, we are going to see these share prices jump by tens to 20s of dollars over the next few years. Now, they also came in with a medical loss ratio expected in the 86 to 87% range. And while this isn't great, it is getting better. Now, that is the most important thing to focus on with young, growing companies like this. Nothing is amazing yet, and that is why we are looking to get in. But all their metrics moving forward are looking amazing. They're looking great moving forward, and that's what we are looking for as long-term investors. It might not look great now, but we all see the vision, and we believe in the CEO, which has done this time and time again with things like Aetna, which they previously sold to CVS. And their CEO even came out of retirement to grow this company even faster. And since then, we have seen a great growth number come out of this company. And moving forward, like we see here, coming in beating estimates on revenue, I believe that they will continue to do so over the next 5 to 10 to 20 years. Now, this is very important to focus on, but let's go ahead and check out our next slide here, which is going to be why is this bullish and what to watch. Now, their margin expansion signals. These are going to be even modest indicators that are improving their profitability and shifting their sentiment positively. Now, this is what I'm talking about with their loss. As these losses are getting smaller and smaller and smaller, once they do flip profitable, these gains will get bigger and bigger and bigger. It is going to work out just like that, and it works out like that with every single company. If you can begin to cut your losses, you're soon going to turn profitable. If you can continue growing revenue and cutting your costs, you're going to continue to grow your income. Now, this is what you are going to look at for a great company, and that is what you have here with a great company in Oscar. Now, the other thing is going to be technical strength building. The RS improvement suggests growing institution interest, often a precursor to breakouts. That is what I am talking about with the analyst downgrades and the hedge funds starting to buy up. We are seeing a lot of insiders buying into this company. We saw the CEO and Kushner buy over 2 million shares combined in the past few weeks. They actually did go ahead and buy 2 million shares on July 11th, I believe. Now, this is very bullish for the stock yet again. Now, what we are also going to be looking at is the bottom line here with Oscar, which is showing a subtle sign of turning the corner. That is very important. Turning the corner, like I said, flipping from non-profitable to profitable. It is going to happen within the next few years, and this is the best time to go ahead and get into a company like this, much like we have done with Hims, Hood, Palantir, SoFi, etc. Now, they're improving their margins and technical strength, which will set the stage for a potential breakout, which we are looking at now. keeping an eye on full year and quarter two earnings release and a call on August 6th. Now, that earnings release on August 6th is going to be very, very important. If that guidance can continue even further, that is going to be a large, large, large day for Oscar. I believe that they can see over a 20% gain on August 6th if they are to beat earnings and raise guidance, which I do, of course, expect. So now that we know what is coming up for this company in the future and what we have seen from them in the past, let's go ahead and jump onto the chart and check out where we are headed over the next few weeks, few months, and few years with this stock Oscar. Jumping over to the chart here and taking a look at Oscar on the 15-minute time frame, we can see that from lows of around $12.86 up to highs of around $15.05, that was about a 17% intraday gain, and we saw volume come in all across the board, driving the stock up to new highs. And I do believe that once we switch over to the daily time frame here, this is going to be the start of a larger rally. I do believe that we are going to target this gap up here from around $18.24 all the way up to around $20.46. Now, once we do, I believe that this move will continue to rally. I believe that this is going to be the start of the big move. This normally does happen right after analyst downgrades, and it normally does happen right after insider buys. Two bullish catalysts that we have on top of our bullish news that came out with guidance today. I do believe that this is going to be a stock that is going to outperform the market over the next few weeks, months, and years to come. Now, let's take a look at the weekly time frame and see where we are going to be headed over these next few months and years. Now, you guys can see just this absolutely beautiful cup and handle right here, looking absolutely amazing. Nothing has changed on the stock at all. The only thing that has changed is that we have gotten even more bullish on the stock after their guidance came out. Now, as this rally does begin to pick up, I do believe that we will go ahead and break through this gap at around $18 to $20. From there, going ahead and breaking out and retesting our double top at around $23.79. From there, that will initiate our third wave move all the way up to around $37. And from that third wave move, I expect to move down for our fourth wave correction, somewhere between $32 and $28. And from there, finishing out our fifth wave micro move into our third wave macro move. Now, what that means is that we are in a 1, 2, 3, 4, 5 Elliott wave theory move to the upside, and this is going to be in the middle of our third wave move. We've already had our 1 and our 2, and it looks like we are making our third wave macro move up higher. And then even on our smaller time frame, we are looking at a 1, 2, and it looks like we're getting ready for our third wave move higher yet again. Now, once that does happen, we will see that fourth wave correction into our fifth wave extension, and that is going to take us up 208% from prices today, and that will only be our third wave extension on the macro time frame. From there, we will see an ABC correction taking us down to around $32 to $28 yet again, retesting those highs of around that fourth wave correction. And then from there, we'll see another micro move taking us up for our wave 5 macro move, which will be a 1, 2, 3, 4, 5 Elliott wave theory move to the upside. And what we are expecting to target here is going to be about another 335% gain from where we are today, up to our fifth wave extension at $64.51. Now, I do expect this to be hit over the next 24 to 48 months. Now, of course, that is a larger time frame, but this is going to be severely outpacing the market over that time. I do not expect to see SPY see a 300% gain over the next 2 to 4 years. So I do believe that this is a great stock to take a chance on. And I do believe with their financials growing at a rapid pace and the chart setup that we are seeing today, this is one of the best risk to rewards on the market. And just taking a look at what we could draw out for our long position here, if you were to enter today with a stop loss at around $11, you would be risking a little bit under a 14 to 1 risk to reward ratio. I believe that that is absolutely amazing to see for something that you could see a 335% gain over the next 24 months. Now, of course, before investing into a company like this, make sure that you guys are doing your own due diligence and research. Make sure that this company does fit your portfolio and trading style. Now, I do love Oscar Health here, and I do believe that is a good risk to reward ratio for most traders. But make sure you guys are doing your own research, please, because this is not financial advice. This is just my trading strategy and what I am seeing here on the chart. Now, if you guys did get any positive information from this video, I would really enjoy you guys dropping a like and commenting what video you guys want to see next. And of course, make sure you guys do drop a sub as we are inching closer to 1,000 subscribers. Now, that was it from me, and that was Oscar Health and their amazing day. And I will see you guys in the next one.